Hello and welcome to another video of the Forex 101 series. If you are new to this channel, Magna FX Institute was created to help traders approach the Forex market realistically, unlike the get rich quick concept that is being promoted online. If you are new to Forex or are struggling with achieving consistency in the market, make sure to subscribe to the channel for more videos that will help you achieve your trading goal. You can also follow us on Instagram at Magna FX Institute and join our Telegram channel for exclusive trading posts. Alright, let's get into the video. In today's video, I am going to be going over trade journaling. Journaling is very essential when it comes to improving your trading skill set. Remember, psychology is also part of a successful trader's skill set. Many traders coming into the market only approach Forex from the technical level and ignore the psychological part of trading. This is why many traders find themselves struggling to break the consistency threshold. When you approach Forex from both angles, meaning from the technical side and from the psychological side, you find out that trading is as simple as you thought it was in the first place. But if you come into the Forex market thinking only trading is about how good you are at technical analysis, you end up struggling with achieving consistency because of some psychological barriers that may affect the way you view the market and some of the actions you take in the market. In this video, we will cover the following. We will begin with explaining what journaling is. Then we'll go down to the 3 ways of how you can journal your trades. From there, we'll go to the advantages of journaling your trades. We will explain in detail the advantages of the 3 types of journaling and how they will improve your trading in general. We will also conclude the video with explaining the importance of being true to yourself. What is journaling? Journaling is the practice of recording your trades in order to keep track of your thinking process before, during, and after a trade, your technical level accuracy, and profit-loss ratio in order to evaluate your performance over a period of time. Journaling is used for keeping track of how we think when we are approaching the market so that we can review our thoughts and emotions and figure out what we can do to better these factors so that we can improve our trading. We also look at our technical level accuracy. Most of the time, our technical levels are not accurate, so we can use journaling to improve the accuracy of our technical levels. We also have profit and loss ratio. Most of the time, traders take trades without journaling the trades they have taken, and after a period of time, they will not know if they are profitable or not. 3 ways of journaling your trades. There are 3 ways in which you should be journaling your trades. You should make them a habit until they become a functioning part of your brain. By taking these 3 actions, a struggling trader can begin to see improvement in their trading. By journaling your trades, you will review your trades and find out what problems you are having in your trades. Unlike when you are not journaling your trades, you will not figure out the patterns that are affecting you to achieve consistency in the market. We begin with note journaling. Note journaling is simply writing all your actions and thinking process in a notebook. In this type of journaling, you are expected to journal your thinking process when you are analyzing the market, how you think price will react, and what levels you think price will react to. Basically, you write what you are expecting price will do and write down confirmations and reasons for your bias. Not only do you write what you are expecting price will do, but also the different emotions you are feeling during the process. This allows you to identify the emotions and thoughts that can lead you to make an error immediately they come up. So this is what note journaling is. You basically write down your thinking process of how you are approaching the market and how you are analyzing the market. Then you also predict what price will do and write down your confirmations and the reasons for why you are taking a particular trade. This is in order to review if your trading plan and your thinking process are allowing you to be a profitable trader. You have to write the price you opened your trade, where you put your stop loss, and your target price. It is also advised to calculate and write the amount of pips you are potentially going to lose or gain. This will make you aware of your risk management. If you do not know how to calculate pips, I made a video of how to calculate pips. If you haven't watched the video, I'll leave the link in the description below. I also made a video on what risk management is. If you do not know what risk management is, I'll also leave a link to the video in the description below. So, in your trading journal, you also have to write down the price at which you have opened the trade, where your stop loss is placed, and your target price. After the trade has been closed, write down how the trade turned out, whether the trade was a win or a loss, and what to expect next. You have to write down the result of the trade, whether it was a win or a loss, because most traders or most people tend to shy away from their losses and fail to accept the reality of a loss. But do not run away from your losses. Your trading journal is there to help you learn from your losses. Make sure to always write down the outcome of your trade, whether it was in your favor or against your favor. We come to the second type of journaling, which is screenshot journaling. In screenshot journaling, you have to take a before and after screenshot of your trades. The before screenshot should be taken immediately you open a trade. That is after you have written down your thinking process, your confirmation bias, and everything that is needed to be written in your note journal. So after you write down everything in your notebook journal, you come to screenshot journaling, where you take a screenshot of the trade that you have taken. So in the screenshot, you should include where your stop loss level is, where your entry price is, and where your take profit level is, and everything that includes the confirmation of you taking the trade. The before screenshot should be taken immediately open a trade, while the after screenshot should be taken after you close the trade, whether it is a win or a loss. Again, accept your losses. It is important to accept your failures because we use them as stepping stones to get to the next level. Without accepting your failure, how will you know what is and what isn't working for you? We always learn from our failures. Without our failures, we cannot learn and in return grow from the failures. Any successful trader that you have seen now, along the way of becoming the successful individual they are today, they encountered failures which they had to learn from in order to grow and develop their trading skill. So it is important to go through the failures, accept the failures, learn to accept from the failures, and become a better trader in the long run. How we journal the screenshot trading is, after you take the screenshot, put the screenshot in a folder labeled with the specific currency names. So here, for example, here is my folder of my Euro USD trade. So I put all my Euro USD trades here. The before and after screenshot of all my Euro USD trades are in this Euro USD folder. So if you trade any other currency pairs, you create a folder of the other currency pairs you trade. If you trade GBP JPY, you make a folder for GBP JPY, and you include the screenshots for all your GBP JPY trades. If you trade AUD USD, you make a folder for AUD USD, and you include all your AUD USD trades in that folder. Label the first screenshot as A and the second screenshot as B respectively. Remember to include the date. Here is an example of a screenshot journal. Here's the trade immediately I took the trade. So as you can see, price was here. I took the trade. I took this screenshot after I wrote down all of what is needed in the notebook journal. So you can see this was my second trade in my AUD USD folder. AUD USD 2, meaning it's the second screenshot. For the first screenshot, you just put A. For the second screenshot, you put 2A. For the third screenshot, you put 3A, and so on. We have AUD USD here, 2A, meaning it is the second screenshot with the date I took the trade. Here is the after screenshot of the same trade as 2B. So the second screenshot of your third trade will be 3B. Your second screenshot of your first trade will be B. Your second screenshot of your fourth trade will be 4B, and so on. So I included AUD USD 2B, signifying that it was the second screenshot, and the date this trade was closed. We come to spreadsheet login, which is the third type of journaling. Log in every single trade. So this is after you have written your thinking process, your confirmation, and everything in your notebook journal, and you have taken your screenshot and have recorded it in the folder. Then you open your spreadsheet where you log in every single trade you take. Trading is like any other business, and every position you open is a transaction like in a real business. You have to measure your profit and loss ratio at the end of every month and find out how you are doing. You have to be completely honest with yourself no matter the outcome, profit or loss. You can use any software, either Microsoft Excel or Google Spreadsheet, anything that you are comfortable with using. Here is an example of my trading spreadsheet. So as you can see, I'm always honest with myself and I always record my trades. In your trade spreadsheet, you include the pair you are trading, your position, whether you are buying or selling. The other term for selling is short. The other term for buying is long. So this is what I include in my position column. The other column is the date you open the trade, the time you open the trade. Make sure the time you open the trade is the Greenwich Meridian time, the GMT London time in short. Then my entry price, my close price, the date closed, time closed. Again, time closed should be GMT, the stop loss, and the pips gained or lost. Then at the end, you either indicate whether it was a profit or loss. If you would like, you can also decorate your profitable trades by highlighting them with the green color. So here is the first trade I took in January, AUD USD. It was a short position, 7th January 2021, opened at 7:06 a.m. Entry price 0.7157, close price 0.7178. The date closed the 10th of January. This was actually 2022. I was mixed up with the date because you know how when a new year comes in, you get mixed up with the year. So this was 2022. I should correct this in my journal. So this was 7th January 2022 and closed on the 10th of January 2022. Time closed 24:40. Stop loss here. So it actually hit my stop loss and I lost 31 pips, which with the smallest loss size is just $3, and it was a loss. So this is how you journal your trades. Always be honest with yourself. As you can see here, I was honest with myself. I had a streak of losses here. So I recorded every single trade and accepted the loss. I came back with profit. I had a loss here of 99 pips. Here, I don't really remember what happened, but I never go above an 80 pip loss. So we have an 8 pip loss here. We have a 90 pip profit here. We have break even. We have a 4 pip loss here, and so on. We come to the advantages of journaling. So what is the advantage of not journaling? If you are still a beginner, you can use journaling to practice how to trade and get better. You will lose the habit of opening and closing trades like an irrational trader, and you have clear, valid reasons to open a trade. I remember when I was just starting Forex, I had this habit of opening and closing trades in hope of gaining profit. I found out that this was an irrational way of trading because in the end I will end up losing money rather than gaining money. So it is important to keep track of your trades and have a clear, valid reason of why you are entering that particular trade. Unlike a beginner trader who is always chasing the trade, opening and closing trades at any point in time. It will also help with your psychology because you will be able to identify the thoughts and emotions that make you susceptible to error. With this, you will be able to reject these thoughts and emotions, allowing you to trade effectively. When you are journaling your thoughts, you will write down what you are thinking, and you will find out that what you are thinking may not be in line with what a consistent, profitable trader thinks. If you identify that these emotions can affect the way you are viewing the market and can affect your actions, in the end, forcing you to make an error, you will notice these thoughts and emotions as you are writing them down in your journal, and you will properly analyze them and be able to reject these thoughts as soon as you identify them. You will be able to scrutinize your trading plan and find out what works for you and what doesn't. For example, you will be able to know what confluences have a higher percentage win rate because you will write down your confluences of entering the trade, and every time you review your trade, you figure out what confluences were written down that have a higher percentage win rate because you will notice the pattern in your journal. Note journaling will also allow you to be aware of risk. After writing down how many pips you are risking, you will be able to identify if your risk appetite is suitable for your psychology and account. We come to the advantage of screenshot journaling. Practicing screenshot journaling is important because you'll be able to find out if your key levels are accurate or not. If they are not, you have the information that will help you put them at the right price zone. This is why screenshot journaling is important. When you take the before trade and the after trade, you will have the information that will give you the right key levels for you to mark your zones. You'll be able to see how price reacts at certain zones and how it moves during specific trade sessions, though the movement will not always be the same. I have been explaining this point in my previous videos. The market will not always have the same movement all the time. The levels it reacts to may be the same, but how it reacts to those certain levels may be different because you do not know the volume of traders at that particular time, what position size they have opened, or whether they are selling or buying at that certain level. These are variables that are constantly changing in the market. This is why it is important to stick to what you have analyzed and let the trade run. You will be able to find out if your trading plan works or not. You can determine this after a series of trades and not just 2 to 4 trades. A lot of beginner traders or struggling traders have this habit of evaluating their trading performance after 2 to 4 trades. But trading is all about consistency. You can only evaluate whether you are a profitable trader or a losing trader after a series of trades. For example, a series of maybe 10 trades. Even a profitable trader can have a streak of losses. It is important to always note down your trades. Make sure to always journal your trades, whether it's a win or loss, so that you can be able to evaluate your performance in the long run. Importance of logging into a spreadsheet. Logging into a spreadsheet is important because you will be able to find out whether your strategy is profitable or not. Over a series of trades recorded, you will have the information that will show you if you are profitable, and that is if you have been completely truthful in your data collection. Collecting your data is such an important aspect in your trading development. This allows you to take your trading seriously because you realize that you cannot just open and close trades without having a clear, valid reason to open your trade. Data collection allows you to review your trades and analyze what trading aspects you need to work on. So, data collection is such an important aspect when you are a developing trader. For you to collect data on a particular trade, you have to have a clear, valid reason for why you have opened the trade, because you will write down the notes of why you have taken that trade. You will write down the confirmation and the bias of that particular trade you are taking, and you'll be able to write down the thoughts and emotions you are thinking before you took that trade. You also take a screenshot of that trade, giving you further confirmation for taking the trade. And you also log in the information of that particular trade into your spreadsheet, meaning you cannot just open and close trades anyhow. Importance of being honest and true to yourself. Lastly, be honest and truthful in your journaling. Lying to yourself only slows down your growth and you will create bad trading habits. Without this information, you will not be able to grow as a trader because you will not be able to find out what works for you and what does not work for you. Do not be lazy to journal. When I began to start journaling my trades, and till now, there are times where I feel lazy to journal my trades, but the desire for me to be successful in trading is greater than any other desire. So the greater the desire, the greater the drive I have to do what must be done for me to achieve my goal. So if you really want to be a profitable trader, you always have to practice good trading habits for you to develop the skill of trading. Thank you very much for watching the video this far. If you have gained any knowledge, don't forget to subscribe to the channel, like the video, and share it with anyone that can gain a benefit. For more trading information, you can follow us on Instagram at Magna FX Institute and join our Telegram channel where we post exclusive content about Forex and how traders can grow. You can find the link in the description below. Thank you and see you in the next video.